Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, October 24th, 2025. It's 2:43 p.m. Eastern Times. I'm starting the video. What I'm going to do is just a quick catch up to any questions on the site here, and there's not many. All quiet on the Western Front today. Not a lot of comments, but do see and just replied to one here, and I'll just click on these and reply to these separately. Do quick updates on the equity markets, punching through the new highs today. But as I stated clearly, my preference because of the all the big earnings next week, I'll get to that in 1 second, is to sit tight on all index positions, VIX positions through next week, and that's at least through Friday because we Amazon and Apple will be taking it home on Thursday. So I'll get to that in 1 second, and then I'll do a brief update on precious metals, silver, nat gas, and maybe crude oil. So kind of the core things right now. I'm watching the stock market, the metals, and some energy. All right. Start out here. There was a comment under yesterday's post on FHN. Someone asked for my opinion on Walmart, talking about calls, and definitely a little too early. Wanted your thoughts on how you'd play this and where to cover my back on your calls and resell calls. I don't. I've certainly done in the past my share of options, but they're not my forte, and I've long since moved away from them. And the reason is, and I say this often, well, every now and then when somebody asks about options, the reason I don't trade options is I like to say it's hard enough to call where a stock's going, to give a price target and call the direction and have the stock go there. It's a whole nother degree of difficulty to get both that right, which of course you need to do on options, and when it's going to get there. So I often say in trading, I'm either going to be right or wrong on a trade. Wrong is a trade I take that goes on to get stopped out for a loss, a booked loss. And early is a trade I get into. It may or may not go against me, but as long as it doesn't exceed my stop or any reasonable stop, and it goes on to play out to my price target, even if it takes 3-4 times the amount I thought it might, then I'm correct, and that's early. So big difference there. And again, that's that time element. And again, nobody bats 1,000, depending on what trade I'm trading and what kind of groove I'm in and what market conditions are, whatever it is. Sometimes, have a very high success rate on the trades. Sometimes not as much. Again, what I'm trading and what the conditions are at the time. But the takeaway is, quite often, much more than 50%, I'm going to be right on those calls. And again, they can take a long time to play out as long as I'm not stopped out. And so in the past, I've seen some really nice trades just kind of, with the options, you have that expiration date and you start getting near that and you get data burn and all that. Now, and of course, again, some people use the paired strategies, and if that's your thing, it's just not my cup of tea. So I'm going to end there. Now, I went on to give my take on Walmart, and I'll show you that right here. Here's a chart. You can check it out if you're trading it. What I see, here's a primary long-term uptrend line off the early 2022 lows. That's a longer-term target. Right now, this stock is clearly, like the market, in a clear uptrend, but the same technical posture. Obviously, this is one of the biggest retailers, right up there with Amazon, Walmart. Clear divergence. And so what I have here, I know this is a busy chart. I already had these levels marked up because this is Walmart. I followed closely. This is what I'd be looking at. You have an uptrend line right here off the April lows. Again, so many stocks, those early April lows. That's you can draw nice clean up trend lines. There's so many. Again, I repeat, so many stock sectors that when those trend lines break, and especially if they're breaking in close proximity with a lot of market leaders, not just big tech, things like Walmart and all that, I think there'll be a waterfall type sell-off. And, where if you're a day or two late, you may have missed a good part of the move. That's my thoughts, only because those are such significant, well-defined levels, and there's a lot of hot air and froth in the market. So bottom line is what I see here. I see big negative divergence has been building for a while. Divergent high. There's a trend line, and as I said, a bull can buy pullbacks to any or all of these. That first trend line is off the April lows. It's more of what I call a minor trend line. There's a more significant one here off the December lows, comes in right there. And if you look closely, let me get to the live chart here for you, and then I'll get to this one. WMT. You can see that secondary trend line, which is more significant. Let's just color it up in case we come back to this. Let's make it blue. Let's make it stand out. That comes in with the 200-day exponential and simple moving averages and a nice support shelf just below. So that's big, big resistance. That will be a longer term, more powerful sell signal if taken out. So again, you can buy pullbacks if you think this is going to just keep going up, buy pullbacks to these support levels. Or if you think we're going to go down, short seller could short down to the next levels. Or a bull could maybe say, you know what, I like Walmart longer term, but I think it needs to correct. I want to come in, buy it, 10% or whatever that drop is. And you have a big, big support level, the 200-day moving averages and a well-defined uptrend line. So there's how that goes. This longer-term trend line is probably where I think Walmart's going to be within the next year or so. And that would be, depending if and when we get there, about a 32% or so drop on Walmart. All right, next one was... somebody asked about, go back to the home page. Again, comments have been quiet recently, but I had one request here from that I just saw today. I've been out doing it. I've been around the house, but just running errands. Just not watching the markets like watching paint dry today. Thank you, Randy. Could you look at SM Energy and DVN? All right, I'll take a look at those. That's just a thank you for a more detailed report on Carvana. So that's just a comment. You're welcome. Thumbs up. This is what I usually do. I don't reply when I see these. I just thumbs up, meaning gotcha. All right, so SM and DVN. SM. I don't have a very strong opinion on this stock or read on the chart. And I'm going to say... yeah, I'll add, these are old levels here. I'm going to add, because we had some reactions back here, reaction highs, then we back tested it, and then it was resistance again. Then we finally broke out and the stock ripped. I think that, and we had, more importantly, a most recent reaction high there. And so now we have virtually equal lows, and you just draw in, you can see the indicators making higher highs. So that is positive divergence. So on any marginal new low, a lot of these stocks and the market makers tend to pull things down to run the stops. So either here, you're at support. You could certainly make a case to go long, or in a slight break below, or the recovery back is your safest bet if you break that down. Targets would be a trend line here. However, keep in mind this stock took out the 200-day moving averages back here. Back test, back test, back test, back test, rejected. So that would also be bullish if taken out, but if you're just going to game a bounce, that would be, those are your resistance levels. The 200-day moving averages, you also have price resistance right here. You can see capped all these moves with support back here. So there's your levels on SM. Yeah, that's it. So the other one was Devon, I believe. Devon Energy. This one peaked back here with a big divergent high in 2022. Been riding down this downtrend line off the highs there. Also, if you zoom in a little closer, lost the 200s there. Tried a couple weeks to regain them, but couldn't hold that. So, like many energy stocks, many things in the sector, it's in a bear trend. It's in a bear market. It keeps getting sold at the 200. So, if you're bullish, looking to buy this stock, at minimum, you want to see the 200s clearly taken out. Again, the stock has a history of brief whipsaws, so you want to see them clearly in the rearview mirror, and then you can see how also added there's a, the downtrend line and price resistance overhead. It's not my kind of trade setup. I don't have a strong opinion, but there's kind of my 2 cents on it. It's in a downtrend. I think better fish to fry elsewhere. But if it can break above these resistance levels, the downtrend line about 39, it should go. Otherwise, the bear market continues. If I'm right on where I think this economy's headed over the next year, you'll most likely see crude dropping for what we call demand destruction, and that's gonna bring these energy stocks down a lot more. You just every now and then go look at the bigger picture, and you can kind of see the bigger trends. You go to a weekly chart there. Okay, let's move forward. Let's talk about, real quickly, the markets. It's punched out to new high, but I made very clear in the last several days this week, and even last, that I'm going to give it some room. Wouldn't surprise me. So a little stop pop here over those bearish engulfing candles. We're still very, very much below the trend line that broke down. And again, there's so much. The next week is it's remember, we're in a data vacuum. We got CPI today, came in right about where expected, just a hair cooler than expectations. And that the only reason we got that report, as you probably read, is they have to do the consumer price index for Social Security annual increases to see what if they're going to increase the, and they did. They're given, I think, a 2.8% bump next starting in January to a Social Security payment. So they have to calculate. So they brought people back in the office to do that, and the market's been hanging on. So they went with it. However, like I said, that to me is nothing. Everything is next week with the big market-leading stocks. You've got, again, like I just said a minute ago, Amazon and Apple take it home on Thursday after the close. I can tell you I'm going to be out of town Friday. And even maybe Thursday, yeah, probably Thursday afternoon, but I'll comment. We'll see. But on Wednesday, I'll definitely be here. You've got Meta, Microsoft, and Alphabet. So let me repeat that. You have, remember, it used to be the Magnificent, or what do they call it, FANG. There were 5 stocks. NVIDIA wasn't one of them. So these are, if you go back for the last 10, 20 years, these are and always have been in the top tier. NVIDIA right now happens to be up there taking the title, and it's an outlier. They report a couple weeks from now. But again, the market cap alone of these 5, Meta, Microsoft, Alphabet, and then Amazon and Apple, and what they say and what they do, we know that there's a circular loop going right now with AI, CapEx. It emanates from the CapEx spending that they're doing, money going into NVIDIA turning around, giving money to OpenAI turning around, giving money to AMD. And again, I refer to that as the AI circle jerk. And it's happening, so the market will obviously always look to see how their earnings come out, what their forward guidance is, but they're also going to be very, very tuned in to any changes, whether it's an increase or a decrease in CapEx spending, especially in the AI arena. So again, to me, nothing between today and next, Friday matters. And the fact that the market again took out those bearish engulfing candles, as I said, is if it happened without this coming up, then yeah, I'd say, all right, that's a significant technical event. And again, look, guys, if you want to take it on, use that as a stop if you're short the indexes, you can always get back in. I can just tell you, once these guys report, the market's either going to rip or dip, most likely. It's probably not going to just flatten out or go up a little or go down a little. So, all right, so that's everything. And again, kind of puts things into, for me, sit tight. It's not been an all-in aggressive short moment, and it won't be until or an aggressive. Well, to me, we'll see what happens afterwards. But at most, it might be an aggressive short moment after these guys report, or it might be time to close out any index shorts and just let the market, run up wherever it's going to run. The VIX. Let me show you something here. I wanted to pull up, if I can pull this. I think I have these set up right. I have to type in the VIX here. Okay. This is the best I can do. I have much larger real estate, a lot of more monitors. When I do these video captures, I have to take a very small part of my screen. So I'm compressing 2 charts in that are usually much larger. And what I'm just going to show you here, you can see when I pop the crosshairs up, on the VIX. The VIX is here on the right, and this is QQQ. Let me do Alphabet. Let me do any of the ones reporting next week. So we'll just use Alphabet. They're all, Alphabet, Microsoft. I just showed you they all report. And what you can see, this is as far as I can scroll back on a daily time frame. So I would go further if I could, but let's just do this. It takes me back to about the beginning of 2020. And so what I'm going to do is I'm going to just put my crosshairs right where the VIX bottomed out before it exploded or had any big moves. So in other words, at the troughs. And you can see right about here where the little arrow is. This is where the VIX woke up. And you can see, I think you can see, if you can't, let me show you. Right here, you can see all these little numbers in dollars and cents. These are the earnings reports from Alphabet. Remember, they're on that same schedule. So they've always been, for as long as I can remember, reporting right there at the same week, same day, Wednesday and Thursday, the five that I just mentioned, the five big market movers. And so, what I've noticed, and like I said, they have, if there's going to be an inflection point, not just a continuation of rally, but an inflection point, meaning a turn down, that's usually when it comes. So when I put my crosshairs there, you can see I'm controlling it here on the VIX with the white crosshairs, but that yellow horizontal line on the left, you can see lines up with that earnings report for Alphabet. Here's another, well, the VIX troughed here, but it started to wake up right about here. And again, I'm just going to right where the bottom was before it went up. And let me just measure it and tell you that was a 160% rally. And when I click on that, that's exactly on that earnings day. So again, that's on that peak earnings week, in other words, not just Alphabet. Remember, they're all together. VIX fell down. There was a little spike right here. That was right around an earnings report. Big spike here. And you can see I'm just right on the bottom. See it troughed out here where my crosshairs are, about 1067. And you can see that yellow line going exactly on the earnings. So that would have been on that Wednesday. Wednesday, whatever that date was there. And then we troughed here in the VIX as well. And it started to work its way up a little bit and then really started to take off right here after this earnings report. You can see that really that one sent Alphabet down. So when the stock gets extended, again, this is what an extended rally can do. This was after COVID, by the way, the biggest stimulus by far with no close second. And I can only refer to it as a nuclear option. And so you had just quarter after quarter after quarter, just profitability and just liquidity driving anything up. I mean, we had the meme stocks that are bankrupt today. A lot of them, they were going up. Everything went up. So that's it, guys. And then right here, you can see a big. We troughed right here, but then a big spike up right about here is where it started to wake up, right where I'm crosshairing. And that was, again, that was one I just covered. And then more recently, we've had the VIX starting to wake up right here. They haven't reported yet, but the VIX started to wake up. So I just wanted to point that out, that again, what I look for in the markets when the charts are starting to set up for something bullish, bearish, I look for that catalyst that you need. There's could be 1,000,001 black swans, gray swans, any kind of event that goes on that moves the market one way or other. But the known catalysts, the ones that we are scheduled, again, and then not to mention the Fed meeting, of course. All right, so that's it. And this is what Alphabet looks like. I just toggled back to the daily chart. And forgive me, this is a busy board. I'm just going to draw out the lines or just highlight. This is what Alphabet looks like. Again, this is right here. You have a trend line coming off that. That's the June low. Nice, clean, lots of reactions. And we're starting to diverge higher, wedge higher for the first time in a while. You can see the PPO was climbing, higher highs. That's bullish in a bull trend. And now we have steep divergence. So this tells me this stock, especially of all the fangs, is going to take it on the chin after earnings based on that technical posture, especially if that wedge is broken right there. And there's a lot of thin air on this stock. By that, I mean, I look at the volume of price histogram. Don't know if you can see it. It's right there. Most trades have occurred right here. Here, I'll turn it up for you so you can see it. A very useful tool. Kind of shows where buying was at what price. So this is where most folks have bought right here recently. So that's where they're in. Very few bought here. And so what happens, that's called a thin zone on the value price histogram. It means once you enter it, it's like a gap. In fact, there was a gap in there. Part of it was a gap. You're likely to fall quick. So that would be, if that thin zone's backfilled, that's a drop of 24%. So we'll see what happens. Again, the charts indicate that way. I'll go over those that reported. I told you it's usually you got to give it a few days. I think Tesla's back down. It was up yesterday, but I always say it's not the day of the announcement, not the following day. It takes a few days for market participants to digest an earnings report and then the stock to pick its true direction. And so this is Tesla right here. This is where the day before they closed right here. At about 443 the day before earnings. We're down, not much, but again, we'll revisit this one. I told you based on the technical posture, this one already broke down, but below that ascending broadening wedge. And this is a level it needs to take out, that post-earnings drop. And there's nice support there as well. And so that's Tesla. Okay, so the VIX, Mr. VIX, just keep in mind, the VIX, like I said, has woken up and perked up, went right into that 2862 target that was laid out before we even broke out. It's still very, very much with the market pushing new highs, very much making higher highs and holding above this uptrend line. That's where we bought it off of last time. And remember, the VIX, when she starts to wake up, sometimes she just runs and goes and has a very few pullbacks to the big move. And then quite often, if you look, you get, she'll start to wake up after you want to see it, constructive divergent low there. She starts to wake up. That time she went to the same exact level she did just recently. And then she'll do this. She'll come down back in as long as she holds those lows, keeps that divergence intact. Sometimes she waits for some type of event that kind of the market's already pricing in. And then boom, you had, this is where phase 2 was, made a little higher. They sold it again, and then boom, exploded higher. And again, you can see it here, divergent low, nice 71% rally, pull back, and then an explosion. So if the VIX is going to explode again, it's going to come in most likely next week after either on Thursday or Friday after those guys report after the bell on Wednesday and Thursday. Let's move over to the metals. Gold's still flirting with that trend line, a hair below it now, a hair above it yesterday. Like I said, this was the uptrend line. We had our sell signal here recently on the break of that minor trend line, and we're back below the trend line, but kind of holding on it. At this point, this is most likely where you're going to get another leg down. I think I gave you, yes, I did. I gave you a total of 5 targets on the 60-minute chart. We hit the first one right away, second one right away. Here's that same trend line. We've been kind of just post. This is the, remember, it was the biggest drop in over a decade, they said, in gold. That's what I heard the other day on TV or read about. It was, so this is, that post big move volatility you're going to get, swings in either direction. Like I told you, I still maintain these targets, but it's going to help to see gold clearly get back below that trend line again. And at this point, traders always going to look at these recent reaction lows. That's where a lot of stops are set. Longs will buy in here, and they'll set a stop below that. So then those stops start to get hit. And GDX is just a sister trade, if you will. We shorted it here on that break, hit our trend line, bounced, hit T2, went down to T3, hit, and we've been now walking between, remember, T3 is support once broken, but that was that, we had that big move down followed by a quick reversal, intraday drop there. This is a 60-minute chart. So this is what we're doing. We're bouncing between right now my third target, support, and second target, support once broken, becomes, you got it, resistance. And so basically, at the risk of oversimplifying things, bulls win, they pop that, at least near term. They still have a lot of work to do to get back above the trend line, to get back above those recent highs. So it's an incremental thing. And then bears win if they take that level out again, especially that previous low, and that'll take us to that fourth target. Silver, that's the 60-minute chart. And on the daily chart, I kept it real simple for you. If swing traders, just one sold target there at 39, and a lot of trapped rats that have been buying in up there. I can tell by the histogram bar. There's a big thin zone down below that would, looking at that could overshoot our T1 level. And if there's a lot of downward momentum going into it, we probably would overshoot and then close back on it, would be my guess. So there's your update on the metals. Remember nat gas. Nat gas is holding up surprisingly well, in my opinion, for what happened with crude. Remember, Trump slapped on some sanctions on two of Russia's biggest oil companies, so that caused a big spike in crude oil. Typically, that will often it's a headwind for natural gas because then crude prices go higher, makes it more productive or cost effective to open up some more wells, do more drilling, and basically crude. I've been saying I don't see a trade in this. It's true erratic. The chart's sloppy, as you know. There's times that we do a lot of trades. I'm very actively engaging crude, long or short, based on the charts and the technicals. Lately, it's just been natural gas, my preferred trade in the energy sector, and so far so good. We took it here on the breakout. We hit that R2. Oh, we hit my first target, pulled back, a little deeper pullback than I wanted to see, but I told you as we were pulling back, once we took that trend line, if we took out the recent lows, which I said ahead, they probably would because that's what they do. They pull that down to suck in some more short sellers, squeeze out some weak-handed longs. I said if that happens and they reverse and recover it, that's going to be bullish because we call that a bear trap, aka false breakdown. And so the point is, nice big pop and a little fade with the rallying crude recently, but not too much. The buyers are hanging in here so far. But again, it's a big kind of sloppyish trading range. And as I've been saying now for weeks, we hit my first target. That's resistance. We pulled back. And now we need to take that out. Resistance must be taken out to open the door to these additional targets there. And then I may add even longer term targets if that starts to pan out. Kind of market related would be treasuries. This is TLT, an active short trade. Just after I give you the setup, I give you the setup, then it triggered yesterday. And I've added a level here. I noticed that there was a little gap in there, and it's about 91. What is that? 91.30-ish. Now you have the recent lows. I'm going to pull that line down here, guys. I'll turn it on for you. When you have reaction lows, traders are going to look at that. So let's turn that up a little bit. It also coincides what TLT wanted to do was a gap backfill. So this is where, and I'm using my little air quotes, right, where the traders should step in and buy on a gap backfill if like so many, and I think a lot, I can tell because I read a lot of articles, listen to headlines and skim the headlines, and most traders have been bullish and are bullish on TLT, meaning bond prices up, rates down. And so they should buy here. And so far they did. But if it's taken out, that's a rut row moment for those longs. Some will have stops here. Some will have stops below that trend line. Either way, like any trade, it either pans out or not. But you saw initial pop today on treasuries, meaning yields went down, bond prices went up. But so far they faded that pop. But again, work to be done. Technically, need to take that level out, and still liking that one. All right, let's just wrap it up here. Let's keep this one short. I'm just, my head's not in anything today here. I answered the questions. Hopefully, you get those. I'll reply to the person that asked for those two, Devon Energy and the other one, to let her know that's in this video. And I'll be shutting down soon. If you have any questions, I might check in a little bit later. It might be after the close, so feel free to post those. Otherwise, like I said, guys, I wouldn't read too deep into anything. I say this every time we have this mega peak earnings season, I call it, when all those 5 of the biggest companies in the world and the ones that really determine where the stock market goes when they report, which often coincides with a Fed meeting to boot. But I'll say the same thing. Whipsaws, false breakouts, false buy signals, false sell signals are more than common in the days leading up, and that when you get into that final week, that final stretch heading into those earnings. So take any breakouts with a grain of salt. Doesn't mean they can't stick, but from my experience, and I've seen it a lot, and it almost seems more than 50% of the time they fail, whether they're false breakdowns giving you a false sell signal that gets reversed, or a false breakout, such as the QQQ pop in the recent highs today. Like I said, I put about a 0% weighting on that. And now, if we're in this same level or much higher, at the end of next week, then the market's powered through, and it doesn't matter what I think or what the FANGs or big tech reports. It's what market participants think. That's always the important thing. And so if that's the case and we're higher next week by a good amount going into the end of the week, it means For whatever reason, the market liked what Apple and Amazon and Alphabet and Microsoft and Meta were selling. All right, guys, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.